What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at SPY, the S&P 500 ETF, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day. Thursday, April 4th. Okay, guys, so SPY here today up 57 cents per share. That is just plus 0.11%. Not an incredibly volatile day when it was all said and done, but let's take a look here and try to pull out as much bias as possible, because we did get quite a bit of intraday volatility that we can pull from and try to really get a feel for this name as we head into tomorrow. We'll finish up with the options chain bias as well as the expected move. Let's take a look. First of all, guys, just really quick data tomorrow, 1 hour before the market opens, so 8:30 a.m. Eastern time, we get the U.S. trade balance. The forecast is minus 67.6 billion. The previous was minus 67.4 billion. And we get a weekly number, which is a market moving number. The U.S. initial jobless claims, that also comes out at 8:30 a.m. Eastern. The forecast is 214,000. The previous was 210,000. We also have quite a few Fed speakers speaking throughout the day, so just be aware of that. But let's get started here by doing our volume profile analysis here on the 5-minute chart. Moves that I'm primarily interested in here today is, of course, this pop and slow fade upside that we got here kind of shortly after the open. I'm kind of interested in this intraday volatility, that fade, pop, fade, big dump, and then recovery. And then, of course, this dump and recovery that we got into the close. So let's take a look here to see if we can pull anything out. Now, off the open, contextual open, higher volume bar, and then a quick fade. We got a couple of pops here. We got a big pop in volume on that green bar. And if we look at that green bar, there's actually not much of a wick up top, which tells me that this likely wasn't all that much of a battle bar. And a lot of that was likely just buying volume. Okay. I'm not going to go as far as saying that that's some massive bullish bias, because you guys know I like to see consecutive out of context bars rather than just one. And the bar to follow was a red bar and it was a little higher also. But I think it's just worth being aware of that. The rest of the move, yeah, we got some consecutive green bars, a few consecutive red bars, but there's really nothing else there on that particular move. Now, this fade, pop, and then dump and recovery, again, we got a little bit of out of context selling volume on that dump off. It wasn't much of a battle bar because there really wasn't much of a wick, but was it really that far out of context? Not really. Okay, so I'm just going to go ahead and we can move on, I think, from that move. There's really nothing obvious with these first two moves at all. Now, heading into the close, we saw a couple of things that were interesting. We did get a little bit of elevated selling volume on these two bars, though that second one, I would say, was almost certainly a big battle bar. Look at how big that wick was on that candle. That tells me that a lot of this volume was just a battle between buyers and sellers, helping to pump up that volume. And then we, of course, got that big volume bar right before the close. And if you look at the actual volume, there's a couple of wicks, but it wasn't really all that much movement when it was all said and done, which leads me to believe that likely, I would say, we're not looking at some massive red bar. I would say a big chunk of that volume was simply algorithms triggering to rebalance for funds and institutions before the closing bell. Okay, so take that as you will, but that's my bet there on that big bar. So I'm not all that scared of that one. Let's move on to the 30-minute chart and start taking a look at the psychological, self-fulfilling prophecy areas that I'm paying attention to come tomorrow. Now, here on SPY, you guys know how I feel. All TA, I look at it as just that, a self-fulfilling prophecy. In the short term, this is all psychology. In the long term, psychology means almost nothing. It's just fundamentals. But in the short term, when we're looking at short-term charts, like basically all these videos are, okay, we're studying psychology almost more than anything. I mean, that's what we're looking at here day to day on the charts, right? We're just looking at the psychology of the market. And on SPY, there's so much volume and there's so many market participants that these levels, I choose them for a very specific reason. The 30-minute, the 4-hour, and the daily. And you'll notice they're very simple. I have the 50 period and the 200 period on each. That's it. The reason I do that is because they're heavily watched. I don't want anything on this chart that millions of others aren't also watching. Psychology, right? I want to know what everyone else sees. So that being said, something interesting happened here today. We broke above that 50 period on high volume. Okay, it wasn't tremendous volume, but it was above average. We consolidated higher, faded. It was a very sloppy test, by the way. Okay, it was very sloppy. But we held into the close above that 50 period. Here's what I'm watching heading into tomorrow, because now we currently find ourselves about 0.35% away from the 200 period here on the 30 minute. Tomorrow, from a bullish perspective, any downside test of that 50 period on the 30 minute, I want to see, again, a high volume bounce. Ideally a little bit cleaner than today, and ideally a little bit earlier before the close than today, because that's kind of a late day test. But the ideal scenario, that's like the downside test scenario. I think the best case scenario is whether we see a downside test or not of the 50 is a reclaim of the 200 period, which would yank that 50 up into an ascending position. Okay, now bears. Listen, for you guys, any upside test of that 200 period, you just want to see a high volume rejection. Okay, but your primary goal is to get down through the 50 period, retest it on low volume after a high volume break, and then after the low volume retest, you see a boom, a high volume rejection. And that would yank that 50 period likely back into a descending trend like we saw, in really yesterday for the majority of the day. And heading into today, really. Now, let's take a look at the 4 hour and see if it's contextual, and it very much so is. So let's take a look. You guys see that 50 period on the 4 hour is very in play right now. It's about 1/3 of 1% to the upside away. Bears, you want to hold beneath that thing, because we gave that up a couple of days ago. You want to hold beneath that. Don't give that up if you're a bear. If you're a bull, priority number one here on the 4 hour is just a reclaim of the 50 period as early in the day as possible and on as much volume as possible. Okay, and by the way, if it holds for 8 minutes, that doesn't count. Right, on a 4 hour chart, we have to be contextual. Ideally, the best case scenario would be a big break on huge volume like off the open, and then either a low volume retest and high volume bounce, or I'd be happy with a decent volume consolidation or grind higher straight from the high volume break throughout the day. Okay, a break with 6 minutes left to the close is not all that definitive, and it's usually leads to a choppier follow on the next day. Now let's move on to the big story. Okay, this chart is so popular. It's so heavily watched. The daily chart on SPY with the 50-day moving average. I mean, you can't get more heavily watched than this chart. What's the story here? It's clearly not the 50-day. That thing's down at 505, 506. It's really not all that contextual, at least for a reasonable volatility expectation, because you're talking about, 2.7% to the downside. We'll worry about that if that comes into play. Obviously, you'd want to see a hold, okay? But, that'd be a very volatile day here. But look, I mean, we currently find ourselves about 1% away from that high, okay? Anything over 1%, you'll hear me say this a lot, in terms of movement, like plus 1% or higher or minus 1% or more, that, to me, is a more volatile day. 1% on the SPY doesn't happen all the time. Now listen, don't get me wrong, it's been happening a little bit more frequently in the last few months, but it's not like tremendously common. So, bulls, I mean, that being the case, it is certainly a possibility, of course. I mean, we're talking 1%, a great scenario. I mean, we have to consider the fact that an all-time high is possible every day, right? And a break and hold of 525 would be beautiful if you're a bull. That's an all-time high and a new psychological level claimed. But tomorrow really, in my head, is kind of a battle of 520. If the bulls can break and hold 520, yeah, it would not be a huge day if that's all we did. But I'd be happy with that from a day-to-day perspective. And bears, if you guys can use 520 as kind of a ceiling to reject off of again, like we've done, kind of did more so kind of today. It was a little sloppy, but that is sort of what we did. That can help you guys set up for a test of each $5 increment, like 515, maybe even heading down to 510 and heading lower and lower down to that 50-day. But each $5 increment is kind of a stair step, bulls and bears. Okay, so we have to look at those here on SPY. Now, let's take a look at expected move. Okay, now, SPY has daily expiration, so this is a huge benefit of looking at this name. And, oh, by the way, I don't think I mentioned. Guys, starting tomorrow, which is Thursday, SPY is going to be a daily upload. Every day the market's open, there will be a SPY video, and here it gets even better. it will hit every day at the exact same time, sharp. The SPY video will hit every day at 6 p.m. Eastern time. Okay, so that's 2 hours after the market closes, no matter where you are in the world. 6 p.m. Eastern time, sharp. The SPY video drops every day that the market's open. Listen, I really hope that's helpful. I love looking at SPY because we get those daily expirations. It really is a beautiful thing. And I know that, trading like options on SPY specifically is so common. And it can be a great strategy if you trade them well. But listen, I hope you guys appreciate the daily videos here on SPY. If you do, maybe leave a thumbs up, maybe even, hey, subscribe to the channel. I greatly appreciate it. But I hope that very like definitive schedule makes it more convenient for you to view these videos. But listen, the daily expirations on SPY, it's a huge benefit because we get to look at expected move every single day without having to do any like kind of math, a little bit of guesswork to try to fill in the gaps. We just get the straight up data, which is, by the way, a huge luxury. You don't get this on most stocks, right? We have tomorrow, which is Thursday's close, the 4th of April, plus or minus $2.51 is the volatility expectation. So that means that options traders are quite literally pricing in tomorrow, Thursday's close, SPY being somewhere around, you're looking at somewhere around like 520, high 521.90s or 522, all the way down to somewhere about, 517 or so, okay? Now understand that expected move, it's a technical term. There is, by design, there's no directional bias there, but what it does, and I know, again, a lot of you trade options on SPY, it's more applicable on this one almost than anything, it gives us a market volatility expectation. And what does that do? It allows you to disagree with that expectation. So the analysis helps us form an idea, right? A directional bias, an idea where volume is likely to come in for traders, things that are likely to be hangups, helpful levels. And then we develop that, and then we go to look at the expectation of volatility. That helps us position ourselves even better if we're trading options on SPY. And then there's one more thing that we can do here. You guys know, right? The bias out of the chain. We have a ton of data on SPY. It's such a well-rounded look because the sample size is tremendous. 6.2 million total contracts traded here today. 2.95 million of those were calls and 3.27 million of those were puts. So we are seeing, it's not overwhelming, but a slight put side bias on the overall ratio. But the short-term speculators, right, those far out of the money calls and puts with, on average, the shortest term expiration, we have 844,000 calls and 1.3, we'll round, million puts. Okay, so a put side bias there out of the short-term speculators today. But again, listen, I mean, that's one factor out of many. And you'll notice that SPY, it's interesting because it'll actually shift a lot more, like back and forth, than, certain stocks will. Like Palantir, we've seen a call side bias like every day, actually until today in the short-term speculator category, for like weeks and weeks and weeks. SPY tends to go back and forth quite a bit, which gives us a really interesting look here. Again, remember, it's just one factor out of many, but consider that. So listen, hey, if you get value out of these videos, again, SPY's hitting every single day, 6 p.m. Eastern time. Please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.